Thanks for your company. I'm Jessica Amir for the Finance News Network. And joining me today from Capital Property Funds is Executive Director Joe Christie. Hello Joe and welcome to the network.
Hi Jessica, how are you?
Good, thank you. So first up, for those who haven't heard of Capital Property Funds, just give us an introduction.
Capital Property Funds is a Sydney-based fund manager. We were established in 2012 and we aim to provide our investors with a net income return of 8% per annum. And that 8% is net of all fees and expenses, and it's paid on a quarterly basis. And we do that with basically two styles of funds. We've got an unlisted property fund structure that we offer to investors. We also have a real estate debt fund, which we obviously also offer to investors.
And now let's talk about the property market, which is cooling its heels in some regions of Australia. But what's the house view on the property market?
We were actively looking for assets in Sydney and Melbourne in the last 3 or 4 years. And I think everybody would agree that firming of yields in both Sydney and Melbourne in the office market has plateaued. And by that I mean that those markets are fully priced now. And so we've actually been actively divesting out of those two markets and actively buying in the Brisbane market. So since about 2016, 2017, we've been actively buying commercial office buildings in the core Brisbane CBD and the near city, or what they call the fringe CBD markets. So we sort of feel as though Brisbane is, say, 2 or 3 years behind where Sydney and Melbourne are. So you're starting to see funded infrastructure projects in Brisbane. You're seeing the underlying fundamentals of the Brisbane market improving. So you're seeing effective rental growth, you're seeing improvements in vacancy rates, white-collar employment growth in Brisbane. And there's also a weight of capital. So there's a lot of institutional investors, both domestically and internationally, that have been buying up assets in the Sydney and Melbourne markets. And I think they've also of the view that, look, those markets are fairly fully priced now and there's better value in the Brisbane market. So that's our house view at the moment. I mean, we're actively buying into the Brisbane market. We probably got in quite early, 2 or 3 years ago, but you're just starting to see the underlying fundamentals of that market improving.
And Joe, what do you look for in a property before pouncing on it and investing?
We're looking for A-grade or B-grade commercial office buildings with large floor plates, abundant natural light, close to retail amenity and transport amenity. So well located, good quality office buildings. And typically we're looking at the exit strategy. So we're thinking when we're buying an asset, we've got to look at who we're going to be selling it to at the end of the investment holding period. And so we're looking to buy institutional grade assets. So assets that would fit the mandate of a large institutional fund manager. But the secret we find is that we've got to be buying assets a couple of years ahead of where the fund managers at the moment are buying. So by way of example, sort of in 2015, most of the larger international and domestic fund managers were purchasing core Sydney, Melbourne CBD assets, and we sort of felt they were getting fully priced. So we were looking at that near city or fringe market. So we bought an asset in Parramatta in 2015 for $30 million. And then we've recently sold that for $57 million after a 3-year holding period. So the average investment in that fund was $100,000. So the investors in that fund enjoyed an 8% income return for the 3-year holding period, and their initial $100,000 is now worth over $200,000. We're trying to replicate that strategy, I suppose, also in the Brisbane market.
Brilliant, and well done to you. Now, can you tell us about the funds? As
I said before, there are two styles of funds. So we have what we call an unlisted property fund. So that's where we buy a commercial office building. Generally it's a 5-year holding period, and the minimum investment into that fund is $25,000. And the funds are geared at 50%. And so the rental income is generated by the tenants in the building, and we simply just pass that income out to the investors. And then at the end of the holding period, we also try to obviously sell the building for more than what we've acquired it for and to provide a capital gain to them. And then the other style of fund we have is our real estate debt funds. And those funds are secured via a first mortgage over property. So whereas the unlisted property funds is a 5-year term, the real estate debt fund is only a 12-month term, and that does have a lot of appeal for investors not wanting to tie their cash up for a long period of time. Still get the 8% return, net of all fees and expenses, but no capital growth in that fund.
And just lastly, before we let you go, is there anything that you want to share with the audience today?
Just if anybody's interested in registering with us as a potential investor, go to our website. It's www.capitalpropertyfunds.com.au, and you can register your details there. Or you can send us an email at info@capitalpropertyfunds.com.au. And we love to see people. So if you're in town in Sydney, we're at 50 Margaret Street, the mezzanine level. and we're always welcome to have a cup of coffee and come in and have a chat and meet us face to face.
Wonderful. Joe Christie, Capital Property Funds, thank you so much.
Thank you very much, Jessica.